Good afternoon. This is Lance Bryce with Thrive Mortgage. Today is Thursday, the 7th of July. I hope everyone is doing well. This is our first call in 2 weeks due to the long weekend, this last weekend. Hope everyone stayed safe and enjoyed the 4th of July weekend. We are seeing interest rates largely unchanged from where they were this time 2 weeks ago. Although we did see them quite a bit lower earlier this week, we are right back to where we were on the 23rd of June. Today, the Mortgage News Daily survey of 30-year fixed conforming loans is at 5.73%. We were at 5.75% this time 2 weeks ago. When you look at the Dow Jones, the Dow was at 31.5 2 weeks ago today. Today it's at 31,384, so pretty much unchanged on the Dow. Although we've had a lot of volatility in the Dow in that period of time. In fact, it's up almost 350 points today alone to get back to those levels. Here's some of what is moving the markets. We are seeing some possibility of the Fed being less hawkish with future rate hikes, both in their minutes, which were a little bit less hawkish than expected. The markets were broadly pricing in the possibility at least of a 1% rate hike when the Fed meets this month. When you look at the minutes, though, they've essentially taken that off the table. They're looking more at a half point, maybe 3/4 of a point, based on the data that comes in regarding inflation and regarding the economy as a whole. The Fed is looking for weakness in the economy, and the more that they see it, the less likely they are to be hawkish with future increases in the overnight lending rate. So we're seeing some indication that the labor market is weakening a bit. There is a report called the JOLT report, which measures job openings, new job openings. That report was much weaker than expected, 400,000 postings weaker than expected. So that indicates some potential weakness starting in the labor markets, which would indicate to the Fed that the economy is in fact starting to slow. And to the extent that it does that, that may forestall the need for future increases, or at least the pace of those future increases slowing a bit. Markets like that, enough for the Dow to be up nearly 350 today. Interest rates are kind of taking a wait and see approach. We get some inflationary news that is outside the bounds. You're going to see that quickly reverse. But the reverse could also be true. We see some indications that the rate of inflation is starting to slow. You could actually see interest rates staying steady or even coming down a hair on that news. So in any event, we're going to keep an eye on it for everyone. As always, if you'd like to talk to me specifically about the market or about any specific scenarios that you might have for lending, give me a shout, 210-260-9660. You can always find me on the web at brycehomeloans.com. Stay blessed, stay safe. We will talk to you next week.